Bitcoin and the broader cryptocurrency market is showing weakness for the first time in many months. In today's video, we are going to be discussing exactly what needs to happen for the buyers to step back in and push the price action back upwards and the consequences if they fail to do so. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day and had an amazing Christmas. In today's video, we are going over the macro charts, the short-term price action, the key levels you should be paying attention to, the expected next moves for Bitcoin, the Bitcoin dominance chart, and the altcoin market cap. Before we get into it, go ahead and smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in the VIP group. To get access, go ahead and click the pinned comment in the free channel by clicking my name. You can also click these two links, the first link being a 50+ month trading track record and a second link being a 10-minute video inside the channel itself. You'll get access to trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to our group chats, our general chat, our trading chart and education chat, our daily video, our help, our trade setup, and our news chat. Check it out, guys. Join up. Go ahead and we'll see you in there. Let's dive on in. So as we can see over the past week or so, Bitcoin hasn't done all that much in regards to the price action changing from where it was since that correction on the 20th of December, where we saw the breakdown of that major 1.5 month long uptrend. Since then, we have seen some sideways price action with a large amount of volatility sweeping down to 92,000, coming back upwards to 100K, back down to 92,000, and then back up to 99K. We have established some very important levels during this recent chop, primarily our lower high points. The first lower high being 102.5, and the second one being that 99.5K region, a point at which we actually came back to retest over the last 48 hours, but have rejected from, indicating again that the buyers were pushing the price up, trying to go higher, but they did not have the strength to reverse that price action. While we remain underneath these lower highs, the expectation is that we are going to see continuations lower, and we are showing overall weakness. So the buyers to really step back in, we absolutely need to break above this prior lower high region at around 99.5K to show us that the buyers are back in control and they're willing to push the price higher. Until then, we are in a position of weakness. We can see the price action is rejected pretty aggressively in the short term, back down to 95,000, and we do run the risk of seeing a negative momentum shift here on the 4-hour chart, which could trigger a continuation into this lower historical resistance range, back into this lower level of liquidity at 92K. We'll come back and discuss this in a moment. So with all this price action developing, we have seen Bitcoin dominance see a little bit of turbulence toward the upside. Of course, that was sparked by a degree of uncertainty surrounding interest rates, and of course the altcoin season seeing a bit of short-term volatility toward the downside, with Bitcoin dominance pushing up and the total market cap pulling back to almost retest that prior 2021 high point. So we'll come back and discuss that in a moment. Moving over to the market data, 24-hour volume was up 20% at 204 billion, with liquidations up 44% at 283 million. 234 million of those liquidations coming from long positions, as a lot of people are aping into long positions at the first sign of strength. But again, this was not strength. You have to again not confuse strength and expected fluctuations in price. The price action is going to fluctuate in an expected range. That is not necessarily indicative of strength, just standard price fluctuations to grab upside liquidity. Again, a lot of people aping into longs and altcoins and Bitcoin on this recent rally only to get stopped out and liquidated on this pull down again. So some pretty significant chop going on for Bitcoin. We'll come back to Bitcoin in a moment. The DXY still showing a fair bit of strength, again holding above the 106 to 107 point. It will remain bullish. For the DXY to turn bearish, we will need to drop below this prior low. So if we drop back below 105.5, that is going to be confirmation of a continuation back toward the midline and then likely continuation into the range low. But until then, we are bullish above this prior low at 105, expecting continuations to 110 to 111. Now, it is very likely the DXY is going to continue upwards moving into the next interest rate decision. Again, as we all know by now, the press conference with Jerome Powell in the last interest rate Federal Reserve press conference added a bit of uncertainty in regards to future interest rate decisions, and that uncertainty again caused a lot of fear in the market, pushing risk asset prices initially downward and bolstering the dollar. And that is a very quick summary, and we've talked about a lot in our prior videos of why we have seen again Bitcoin come down a bit, why we have particularly seen altcoins drop a lot, as altcoin is more of a speculative asset in the cryptocurrency sphere, and again why we have seen the DXY push upwards as a consequence of that uncertainty. Looking at the S&P 500, actually surprisingly showing some strength over here. We have actually seen this prior red candle almost fully engulf with 22 hours remaining on that weekly candle close. Very, very strong looking over here. We will need to break this weekly above that prior high. We're looking for the candle close of the prior high at around $6,098 to confirm continuations higher. This is an initial sign of weakness, but the response to that weakness has been aggressive demand. So we'll come back to that initial statement we've said basically the whole month. Short-term bearish, macro bullish, cautiously optimistic. That is the statement we've been saying since December, and that is a statement we hold very true to. Cautiously optimistic. The macro projections are still strong, but the short-term price volatility and uncertainty driven through as a consequence of the interest rate uncertainty, we have to be aware of the potential downside risks that can actually develop into. Let's go ahead and jump into Bitcoin. There's a lot to talk about. Before we do, if you were interested in supporting me making the content, supporting the channel itself, and supporting you as a trader, join up to BitGet, BitUnix, or BingX. You can sign up to any of those exchanges down below using the links. You'll get a lifetime trading fee discount of 15% of all your trading fees, and that can build up to 45% based on your trading volume. Check it out, join up, and we'll see you back in the video in a moment. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back in. And first and foremost, I want to take a look at the recent price action and some very important levels of support on the higher time frame. So let's jump over to the daily chart. This is the daily chart. As we can see from all metrics, the daily chart is still bullish. We are still in an uptrend. However, we are starting to see some weakness develop, particularly of the price action dropping back to the 50 EMA. Now the 50 EMA, our EMAs are essentially metrics of volatility. So the bigger the distance between the EMAs and the price action, you could almost argue the strength of the trend is stronger, and there is more volatility. When we're above it, it's bullish volatility, below it, bearish volatility. So when we do see the price action make these large gaps between the price action and the EMAs, and then over time, the gap starts to shrink as we are seeing here, this can be identified or explained as what we would call exhaustion. This is a signal of exhaustion. The price action is seeing decreasing bullish volatility and thus decreasing strength. Now, it has not decreased to the point at which we would call this a downtrend. It is simply showing us some signs of exhaustion. It is a warning sign that if we were to drop lower, we could start to develop a short-term downtrend. So it's very important we understand the difference between short-term bearish and high time frame bullish. From a technical perspective, from a structural perspective, the price action is still stable. It is still strong for Bitcoin on the higher time frame, and that will remain a fact while we've sustained above the key levels of support we'll discuss in a second, no matter what happens in regards to the short-term price action fluctuations. So let's talk about this high time frame chart. As we can see here, there are a few levels I want to show you. First and foremost, we are looking at our structural levels. These structural levels we are watching are going to be the level at 88,000 to 89,000. This is going to be our sell side liquidity, a key level of support we are watching, which has confluence with the leading span A of the Ichimoku cloud. A breakdown of this support level results in the price action entering a massive volume gap between this $88,000 level and this low $70,000 region. Again, if we bring up our VRPV indicator, our visible range volume profile, again, my settings are simply going to be 200 on the row size. We can see that according to our VRPV, below that $88,000 region, we can see the VRPV significantly drops off until we reach that low $70,000 to high $90,000 region, indicating that the price range between these 2 points is a low historical resistance range. If we see a break into that range, as a consequence of a loss of critical supports with bearish volatility as the price action will be below the 50 MA and the leader span A, we enter a range where we are likely going to see increased bearish volatility and thus some aggressive downward price action. But until that happens, until those things occur, Bitcoin is bullish. Bitcoin is in a uptrend. We are just experiencing a short-term drawdown, and not every downward move is bearish and not every upward move is bullish. So to keep it simple, while Bitcoin remains above the 88,000 support, we are expecting continuations higher for Bitcoin, well above 110,000. The worst case scenario we could see here for Bitcoin would be a momentary drop below that $88,000 region into that $85,000 region, only to grab that lower side liquidity to see a then continuation higher. We will be very concerned if we do drop below our lower band on the cloud, the leading span B. If we do lose that level, again, that lower point of liquidity over here would be lost. We'll come back to that on the short-term chart, as you can see over here, 86,000. That will be of massive concern for continuations lower. Until then, a loss of this level will be would be considered a liquidity grab before a continuation. So from a daily chart perspective, the key takeaways are: 1, the chart is still in a uptrend. 2, the uptrend is beginning to weaken. And 3, the key bearish trigger points in which if we break below, we turn bearish, have not yet been activated. However, we are pretty close. So this entire move upwards, since all the way back, we're looking all the way back at early October, this is essentially the first time we are seeing some potential weakness since we have broken out since October. Okay, let's move over to the daily chart. Now, the daily chart, the 4-hour chart is very unique, as if we look at the price action over here, I want to show you this key trend line, okay? I want to show you this liquidity grab, and I want to show you this run up to an all-time high, and then a drop below the trend line. We can see a very similar thing occur all the way back in December 2023. We had almost identical price action. We had this liquidity grab to lows, we saw a run up to new all-time highs, only to break below the month and a half uptrend, and then this slow gradual ladder batter down to retest that lowermost level of liquidity, mainly watching for a drop below this level, this massive liquidity nuke. We are watching for a liquidity grab below here, stopping out everyone who entered positions at that point, only then to see a continuation into a brand new high. That is a real possibility we are watching out for Bitcoin's price action. We come back to the current price action. We can see this is a possibility we have been watching out for a long time. Now, if I go you on our Telegram channel and we show you this post from our Twitter account, posted on the 6th of December, we showed you that we saw this test nuke and we had the possibility of following what we saw in 2023. If we look at the price action, we have done almost exactly identical from that test nuke. We've seen the all-time high, we have seen the breakdown of the trend line, and we potentially do run the risk of seeing a correction into those low points. So for Bitcoin, on a short-term perspective, we'll come back to that statement, cautiously optimistic. If we are going to be objective in regards to our structural levels, we are watching our horizontal trends. So again, our horizontal high at the 23rd of November is a current level of resistance. We have rejected once, we have rejected twice. Therefore, this is going to be a bullish trigger point for Bitcoin to continue higher. For us to be bullish on the short term, we need to see the price action break above here. While we remain underneath 99.5, we are expecting continuations eventually into our lows at 88 and 86,000, where we will expect reversals to develop from. The price action is incredibly choppy. We have to be watching our key trigger points. As we can see, the POC level has been slowly shifting downwards over time as we have been building up liquidity within the range between that $94,000 and $99,000 region. We can see on the 4-hour, the RSI could potentially be shifting toward the downside. And for us to see that continuation, we are going to need to drop below that $94,000 or $95,000 support right below us. So we are sitting between a support and resistance. A break of the 95,000 support results in a continuation toward that sell side liquidity point as we saw in 2023. If we sustain above here, we will continue to chop between this resistance and support until one of which breaks. If we break above this high point, we are then expecting continuations, and we would argue the downward move has been completed and the exhaustion has been absorbed. So those are the two important levels you need to be paying massive attention to. A break of this high point equals downward selling pressure has been absorbed. The price action is more probable to continue upwards to likely new highs. If we break below the $95,000 region, that is going to be the trigger for new shorts and continuations to retest that sell side liquidity on that massive test new correction before we saw the continuation to the all-time high. So pay attention to those levels. Let's move over to Bitcoin dominance. Bitcoin dominance, guys, isn't showing anything too snazzy. We can see the weekly candle over here, 3 days remaining. We ideally want to see, at a bare minimum, these highs on the weekly hold as a resistance. And this is for the sake of altcoins, right? Remember, if Bitcoin dominance goes up and the total market cap goes down, altcoins get slaughtered. And that's what we've been seeing lately, right? Some altcoins are down 50% in the last 2 to 3 weeks. Crazy stuff. So ideally, worst case scenario, we touch here and we continue lower. Best case scenario, we see this trend that we have broken down become and hold valid again, and we see continuations lower. For us to be confident Bitcoin dominance is going to drop again, we want to see a loss of that 55.3% level, that prior low, for continuations toward these low points. If we look at the total market cap, we do have a potential downward move incoming. Again, we do have this untouched level that we could come back down to retest at the $3 trillion level. I would only be concerned for macro on regards to cryptocurrency, for the macro, if we lose that 3 trillion level. So we could see a correction in here. In my head, that would still be bullish. If we see a continuation, fantastic. But if we drop below that region, that is when I'd be really concerned about the macro integrity for cryptocurrency in regards to where we expect Bitcoin, particularly Bitcoin, to go. As a consequence of that move, it is highly likely Bitcoin will be at least testing these lows, or maybe even dropping below these lows. And again, if we lose these low points, we do run the risk of having actual macro structural impacts in regards to the macro trend. So that is when that macro bullish trend becomes threatened if we drop below that level, not until. So the total market cap losing this level will increase the probability of a macro continuation, and this being a top for the total. Until then, it is not. Until then, this is just a correction, hopefully into our prior highs before we see reversals develop. Looking at the altcoin market, a very similar scenario over here. Just zooming into altcoins, exactly just on the total 3 here, ignore everything else. Actually, let's just delete everything. Let's just go ahead and just get rid of all this stuff to make it nice and easy to see. We're watching one very important level, and that is going to be this horizontal level. This is going to be the yearly resistance. This is our yearly resistance. We can see we rejected from here again in March, April 2024, and we finally broke out of that region. When we broke out that region, we saw altcoins go up 100, 200, 300, 500%. That was essentially the start of the altcoin season. Therefore, if we drop back below this region, that is going to be the invalidation for altcoins. So altcoins have potential to do very well. Are they doing well right now? Mediocre, some doing good, some doing bad, but they had the potential to do very, very well and continue this macro uptrend, provided 840 billion holds. If we lose that level, they are in desperate trouble. So we do have to pay very close attention to that. I wouldn't be too concerned for altcoins right now. Only if we do drop below that level just identified at 840 billion, would I start to become very concerned for the macro outlooks for the altcoin market. And again, for that to occur, we are going to need to see total drop below. We're going to need to see Bitcoin drop underneath. Because a lot of these things need to occur. And this is essentially the early warning signs, the early stages of what we could see potentially develop into a higher time frame downtrend. Will it develop into a higher time frame downtrend? No, most likely not, but it is a warning sign for what could potentially come. Now, I always say, it doesn't matter if you're a bull or a bear. It's best to just be neutral, but it doesn't matter what you identify yourself as. If you identify as yourself as a bull or a bear, you have to be aware that by doing so, you automatically blind yourself to 50% of the potential opportunities the market has to offer, okay? I am going to remain bullish. On the macro, I am bullish, but on the short term, as I've been saying, ever since I exited my positions. Now remember, our final target for Bitcoin, if you've been paying attention, we told you the final target was 106.5 to 108,000 in our videos. We said that in our videos. Since then, we have been bearish on Bitcoin, and I will remain short-term bearish on Bitcoin while my horizontal levels of resistance remain as a resistance. I will be watching for these lower targets. Thanks for tuning in. Catch you in the next one. Have a fantastic day. See you on Sunday. Bye.